All right. Can you guys hear me? Just doing a quick sound check before I get stuck in. Just double checking that you guys can hear me loud and clear. All right, excellent. All right. Well, there I am. Let's start off with a little explanation as to what I'm doing here. Right. Today is less about looking at the actual market, more about sort of going through, I guess, explaining some of my methodology, what I use, why I use it, and more importantly, sorry, more to the point, what I don't use that you might already be using. And look, caveat here, I'm not saying this to upset anybody. I'm not telling you what you're doing is wrong. I'm giving it to you straight, okay, like I always do, but this might seem brutal. For a couple of people, because some of the stuff that I'm going to absolutely rubbish, you may actually be using yourself currently. Again, it's not to upset anybody. It's purely there to help give you some perspective on why I don't use certain things. So at TraderCobb.com, look, we focus on, well, basically, I just teach what I trade, that I've been trading for the last 13 years. I've traded on multiple different types of markets. It's basically human psychology. Markets move because there's buyers and sellers. It really does come down to that. It's very, very simple in that regard. So what I want to do is take you through right now and show you a couple of the things that I don't use that are explained in the courses, but I wanted to take you through now and do it for nada. So the first one I want to touch on is, and of course, look, you can ask your questions, please. It's an interactive session. Any questions, just ask. Happy to keep my eyes open and answer those questions. But look, the first thing is sloping trend lines. Look, if you've been following me and what I do for a little while, you'll know that I don't like sloping trend lines. You know that I don't use them at all. And let me explain why. Let me throw out the 4-hour time frame here. For me, when I first started trading, and even at my third year, when I started to get some really good mentors and traders around me, I basically got to the point where my mentor at the time said, look, if you keep using sloping trend lines, I won't be your mentor anymore. And I was like, okay, that's pretty damning. I'm not going to use them anymore because it was the last thing I'd hung on to. I'd given up on so many different things because, I was like most people when they get in the markets, unless they're really smart and they go and work with someone that they know and they trust and they believe is good at what they do to get proper trading strategy. I was sort of trying to learn everything. It didn't work very well for me. I was jumping around from indicator to indicator. I was using squeeze indicators. I was using custom indicators, MACD, RSI, moving average, crossovers. I mean, you name it. I've kind of had a crack at that, and it's not really worked out for me. So I really did cling on to something that gave me something more successful, which was the ability to sort of build a strategy around it, and that was sloping trend lines. I was told to get rid of them because they weren't going to serve me. Now let me get rid of these horizontals and make my chart nice and clean for all of you. All right, there we go. Get rid of all those. So, sloping trend lines. Why don't I use them? They're too subjective. It's that simple. It's that simple. For me personally, they are far too subjective. And I'm going to show you with this Ray. Actually, no, I don't want to use Ray. Ray, you can go, Ray. Oh, hang on. Now let's go for the extension. I'm just trying to work out which one to use because I never use them. I'll go extendo. All right, so let's draw in some trend lines. You got to effectively what you're trying to do is trying to find one or two or more. Usually two or more tests of a specific point will equate to either support or resistance where price is above or below. In this case, this trend line we're saying each time it hits, it's finding support. Okay, so we got one there. All right, let's go and find another one. We had one that broke through there. So if you look through here, test 1, 2, 3, and then bounce again there. So we got another one down there. If we come up to here, we have one up through there. 1, 2, 3, broke down. Oh, sorry. Of course, I've got to click to that one. My apologies. Sorry. So yeah, you've got these. So far, I've got one trend line, 1, 2, 3. Then I got another one here, 1, 2, 3. Another one here, 1, 2, 3. I think we're all good again now. My apologies. I'm not used to having the mug up, my face being predominantly up there on the chart. It's usually charts and and Mimush. All good. We're up there now. So again, look at how subjective these are. And this was the issue that I had with them. Everything that I was trading, it was all objective based. It was all about being objective. So and it's the same way as how I trade now. Another one here. Look, 1, 2, 3. What's going on here? It's getting very parabolic. Straight down through. So that. The reason that I don't like sloping trend lines is they're just too open to interpretation and manipulation. The way that I trade now, it's through literal written checklists. And if anybody, if you are brand new to me, Craig Cobb, and the company TraderCobb, TraderCobb.com, then you won't know what I'm talking about. And if you are new, then I welcome you. Welcome to the party. But it's more important to understand the sorts of reasons that we've had success and I've been able to trade as a career for quite a while. It's by stripping back those subjective elements, really. So sloping trend line, let's go down to another time frame. On the 1 hour here, look, we could be drawing these all over the place. What you end up with is a messy looking chart. Now, one of the issues that I had, and again, look, you could just, it's endless where you could draw them. You can really create such a messy bloody chart that how are you going to actually make any decisions with something like this? Look at that. What an absolute shit show. It's not something that is conducive of being decisive because you're thinking, well, is it going to pull back to this one or is it going to pull back to this one or is it this one or is it? It's just too difficult. Far too subjective. All right. So when it comes down to subjectivity, it allows you to manipulate. Now let me see if I can find, I think Binance at the moment. Yeah, okay. So what I would do, I know it's broken down now, but what I would find myself, and this was really the kicker for me. Okay, so here's another example. I actually wanted to try and get it up here. All right. So what I would do, and this is what I was saying, it was one of the positives that I took from sloping trend lines, which is to actually get a strategy. I would be like, okay, well, if it pulls back into the moving average area and pulls back into the sloping trend line, well, I'll look to trade bounces. So I needed to have it pull back and touch on that sloping trend line. I needed to have a small bullish candle in an uptrend, and I would enter in the break of that, and away we went. That was as simple as what it was, but it started to put me into the way of thinking in a checklist, an objective way of thinking, a literal thing that I would write down and I would follow, and that would become my trading strategy. Now, I still didn't have a great deal of success long term with that, but it did give me a sense of being. I was acting within the markets with somewhat of an idea of what I was trying to achieve. Now, coming back to sloping trend lines, if it did something like this, for example, it broke down, I might just take that trend line and go, okay, well, look, it must be on this one then, because it tested here and there's another test here. I'm going to get long here. What I was doing effectively was I was creating what I wanted to see, and I could do it again here. Look through here. So if it didn't give me what I wanted on that trend line, well, I'd just find another one that would work. I'd draw that trend line in, I'd tweak it ever so slightly, and hey presto, there's my little candle that I wanted. So I would manipulate the trend lines to fit the outcomes and objectives that I wanted to have. Now, that is not going to help you long term, because what you're doing there is you're not dancing with your partner in motion. You're dragging that partner around. You're taking off too deep on the wave and you're pulling into a closeout, but you're expecting to make it. It's not going to happen. It's not a good way to attack the markets. You've got to be in motion with the markets. You've got to be flowing with it, agreeing with it, working with it. And not trying to, drag it around too much. So sloping trend lines are an absolute no-go for me. They are a subjective mess, and have a look at that. There's a reason. Who wants to be looking at a chart like that? Not me, and no professional traders that I know are doing that. Now, there is one exception. I know that Peter Brandt does use sloping trend lines. That's fine. To each their own. I do not. I know Peter Brandt I was in the Traders magazine issue, the same issue that he was on the front cover of. I had a 5-page thing in there. Respect him, I do, for what he does in his career. I just don't use sloping trend lines, and I found it to be very, very beneficial to my trading. The second thing I don't use, volume. And let me show you why I don't use volume. Okay, let's throw up the volume indicator here. And this one might confuse a few as well. And again, just a caveat that anyone who's jumping in, I'm not here to tell you off. I'm not here to tell you that anything you're doing is wrong. I'm here to tell you what I don't use and why, okay, to empower you. Okay, so looking here, we're looking at the 4 hour. Let's jump across to the daily. I hear people all the time saying, it'd be great to see a strong rejection on big volume. There it is. Now, it's a big candle, which is typically a strong rejection, right? A big candle typically ends up being the strong rejection. A big candle will typically have big volume because that's how it becomes a big candle. It's supply and demand, a lot of movement, a lot of volatility, a lot of volume. So it's a self-fulfilling prophecy. Big green candle, people say, I'd like to see a really big green candle on strong volume. Highly likely that you will. If you get a big green candle, it's likely you'll see big volume. Okay. Now, if you notice this, it's very simple. You go, look at that big seller volume. It doesn't mean big seller volume at all. It just means big volume and price closed lower than where it opened. It doesn't mean that there's big seller volume. It means there was more sellers that day than buyers because it obviously closed lower than where it opened, but it doesn't read more than that. It just doesn't. Very rarely will you get a small candle with really big volume. Very, very rarely. Small candle, small volume. Small candle, small volume. Get a little bit of a bigger candle, a little bit bigger, and so on and so forth. If you understand how volume works, you'll understand that it's not something that really needs to be. As long as you're trading a volatile market, as long as you're trading a market that has enough momentum, then it shouldn't be something that factors into your trading as far as I am concerned. It doesn't factor into mine. So, for example, when I trade foreign exchange, am I going there and looking at volume? No, because I know there's more than enough volume. I couldn't care less about the volume. If I'm going to trade the S&P, am I going to care about volume? No. I know that there is enough volume there. I don't care. Okay? So I don't use volume because it's yet another indicator that really is just a distraction from what is truly important. Something else, moving average crosses. So this will be the last one that I cover because I don't want to take forever of your time. MA, moving average, I use exponential, it doesn't really matter. So I'm going to throw those in and I'm going to do this. Let's make a change. Okay, yeah, whatever, let's do the inputs. Let's make this one the 50. Let's make it red because most people do. I'll make it pink because it's easier to find. Okay, cool, okie doke. And let's go ahead and make this one the 200 and let's make it green, as many do. Input 200. Now this is the marveled golden cross, the most bullish signal in the world. No, it's not. It's a wonderful hindsight signal. Let me explain what I mean. Okay, so the hindsight signal is this. And by the way, if you like it, if you're liking what you're seeing at the moment, hit the like button. If you're on Facebook, hit the thumbs up button. I mean, yeah, just hit the right buttons. You know what you've got to look for. Just hit the buttons and then subscribe and hit the bell so that you get alerts when I go live. There you go. Okay, so let's have a look here. The golden cross. Oh, there's been a golden cross. And it was right because look at the price movement. Okay, all right. Let's use this in a practical way. Let's understand what it's actually telling us. The red line is the 50 period moving average. As you can see up here, real simple. All right, the 200 is the green. The 50 is the last 50 candles. 1, 2, 3, 4, 50. Right? And it's the red line smoothed out. It's showing you what the price is doing smoothed out. Of course, price is there. The moving average smooths it out for you. The 200 smooths out the last 200 candles, and you get the point. Now, don't get me wrong. It's nice to see all of these in the correct order, but I don't really care about the 50 or the 200 for my trading sake. Why? Well, when this golden cross comes, what does it mean? It means the price has already moved. It doesn't mean it's going to continue to move. That's the biggest issue that I have with how people use these indicators, these moving averages. If you note up here, okay, let me just zoom in a bit again. You go, yeah, but Craig, it's been right each time. Well, that crossed probably here. So you go, okay, cool, golden cross. I'm going to sell the market. And then it goes all the way back up here. So you're out of pocket $4,000 of Bitcoin. And then it crosses up, so you buy. And then it crosses down over here, so you sell. But you're selling probably somewhere around here as the momentum of the 50 days needed to roll back over. Now you're selling short, right? How much can you hold this? Like, do you see what I mean? What's going to happen is that because price continues to move and oscillate, the moving averages will move and oscillate with it. So if the price goes down and then back up, well, that MACD, so that 50 period moving average is going to follow it as those candles are closing. So the use of a cross as anything, in my view, and look, don't get me wrong, I have traded these before. I have followed these old school, $5 dummies guide to trading books before. I understand that they're very easy to use. Okay, they're very easy to use because we want simple solutions. I can remember taking a full week off work when I was in London and sitting there and trading I think it was a 3 and the 8. Every time the 3 crossed up, I'd buy. Every time it crossed back down, I'd sell into new positions. So I was just constantly there. It took me 3 days. I'd taken 5 days off. I was trading foreign exchange, and I took 3 pairs I was going to trade on. It took me, I don't even think I made it 3 days until I went, how much more money am I willing to lose? Because it looked great back testing. It looked great. Why did it look great back testing? Because it didn't show all the little crosses and how many times they happen. It just showed the hindsight crosses like we see here, like we saw back here. Before every good move, you will see a very clean cross. After the move, you'll see that very clean cross. So that's why I don't actually use moving averages in that sense. The 50 and the 200, I don't trade off of these two. I focus on this cradle zone, and that is it. I keep my trading very simple. I keep it very straightforward. I keep it very basic. Why? Because that's what I am. I am pretty straightforward, pretty basic. I've made sure that the checklist, for which there's 8 or 9 for the essentials. Okay, then you've got your bonus factors for this between 9 and between 8 and I think 11. But it's to help me with those probabilities. I don't use the moving averages for buy and sell signals. I don't use the volume for anything, right, at all. Because I'll show you how to view that on the chart, and I'll show it to you in just a second. And I do not use sloping trend lines. Subjective, subjective, subjective. If you want to know how I do use volume to avoid a chart that might be, actually, let's just go to here. A chart that might be too thinly traded, so not good enough to trade. Well, I just read it on the chart. If I come to the 15 minute, look how gappy this will be. See that? I don't need anything to tell me that there's not much volume here. I can see it. I've got a visual right there in front of my face, right there. I can tell you right now, this is far too thin for me to trade on margin. Again, it comes down to what you're taught, who you've been taught by, and how you can understand that. It's not just about going, here's a strategy, go and use that. It's about understanding each dynamic, each individual element. Because if you understand each individual element and it's taught to you in a way that you truly get it, you're going to have times where you know what you're doing, not just because you've got a checklist that tells you what to look for, right? You know what you're doing because you understand why it all comes together. I guess that's the biggest thing to say to you guys. So, I mean, look, I don't want to go on for too much longer. Questions? Will you do a video on the tools you do use? Mate, I've already done them, DJ Blitz. They're all there in the memberships, mate. I mean, look, there's the best thing, if you do want to look at more, if you do want to look at the strategies, how they operate and whatnot, there's free stuff on the website. This isn't meant for me to do an advert at all, so I want to keep it short and sweet. But there's plenty of stuff. TraderCobb.com. Go and check it out. But I really wanted to do this one because we are getting a lot more momentum. We are getting a lot more opportunity. We are getting a lot more people coming into this market now. And we are getting a lot more of you guys and myself. And the people that have been away from it for a while, fair enough. I haven't been away from it. I've been involved in it from day dot because, well, for the last 18 months, I've been involved. And, I was okay last year because we could trade short. That's another thing that we can work with, make money whether the market goes up or down. But I just wanted to get some ideas across to you guys and challenge, I suppose, some of the stuff that you might have learned in the past, not in an abrasive or arrogant or condescending way, more in a way that I'd love to be able to teach you guys more. And the only way I can do that is truly by proving that I know what I'm talking about and hoping that I can give you guys some stuff for free that helps what you do. So guys, like I said, hit the little bell and subscribe. Follow me on Facebook, Twitter, and YouTube. And look, the other big thing is, if you like this stuff, I'd really appreciate it if you shared it with the groups that you're in, the Slack communities, the Facebook groups, and your friends and family. It would be very, very good if you could do that. Guys, have a fantastic day, and let's see what the market brings us. Cheers. Bye for now.